walk us through these moves that we've seen? And it still seems like, though, David, that the consensus and what we're hearing from analysts in the last hour or so is that this is not enough.
Yes, it's very debatable whether it is enough or not. Certainly, it's got a knee-jerk reaction, which is certainly positive if you're a Yuan bull. But long-term, the fundamental problems still exist. And the market's looking for more stimulus out of the Chinese economy to prop it up. If it doesn't get that, it's going to be very disappointed. And of course, you've got the Fed side of the equation as well, where the Fed's saying next week they're expected to raise rates, and they may even signal more rates. And if they did that, then that would obviously be sort of dollar positive. So when you combine both sides of those equations, if you look at dollar yuan, yes, near term or today it's got weaker. Longer term, you go, unless either of those two are changed, the risks are still skewed towards dollar yuan going higher, certainly in the near term.
Yeah, David, the market does, well, the market seems to be buying it. The sell side notes that are coming through say this is just a band-aid, just being, I guess, in some ways ring-fencing the weakness at the margins here. What could change the story on rate differentials fundamentals in your view, David?
I think it's going to be tough in the near term, if I'm honest, because I don't see the Fed changing its story at all. I think the market might actually be underpricing the chance of a September rate hike. I mean, certainly, look at Fed President Christopher Waller. He's already said, look, September's a live meeting. And look at Fed Chair Powell. He said, look, we'll go back to back if we need to. Certainly, the data at the moment is looking for a soft landing in the US. But if that data starts turning around looking sticky, the Fed may say, oh, we will go in September. And with the market not pricing that in, then that would have to be priced in, which obviously would widen the rate differential rather than narrow them. So unless US data really comes in weak, which will really support this soft landing stance, and not too weak to worry about recession, but if that soft landing stance goes, then you make it a bit more narrowing. But I think in the near term, the Fed's going to push back against this idea. Therefore, the rate differentials, until you look at the yuan, I think it's going to be tough for them to narrow much in the near term.